In this video, I will walk you through a scalp trade I had in the beginning of 2023. A hidden buyer was obvious on the level 2. That combined with a tight consolidation allowed for an extremely tight stop and a very good risk to reward. Even though the stock did not follow up like I wanted it to and I made some major mistakes, the trade was still good and there is a lot of value to be extracted from the recording. First, I want to show you the daily chart so you understand the context of the trade. The stock rose more than 1000% in 3 days due to a short squeeze hype, then put in a day of rest at the top and the trade took place on the day after. I was hoping for a second leg higher or at least a retest of the previous high. Now I will show you the intraday setup, but before that please consider liking and subscribing so I know it is worth giving away all my knowledge for free. Pay attention to the time and sales here. 448 has already bought thousands of shares while only showing 100 shares visible in the order book. This is the first clue we get that there is a hidden buyer at that price. Also pay attention that it is Amex buying, it is going to be important later. An order like this is called an iceberg order or held order. If you see it by itself, it is not a reason to get into a trade. But if you have a thesis and you see an order like this that supports your thesis, then you have the opportunity to get involved with a very tight stop. For example, if you have reasons to want to be long but don't have reasons to be involved yet, seeing a held bid like this gives you the opportunity to get long in front of it, and if it drops you just use the 447 bids and below as your stop level. Keep in mind that this is a technique that you should only use in combination with other factors and also only in scalp trades. For bigger picture trades, you look at different and more significant reasons to enter and exit. Pay attention that there is a held order at 450 as well, but it is on the offer and it is not as significant as 448. I call 448 significant because it bought a huge amount of size compared to what it was showing in the order book. Now that we also saw 450 holding the offer, we know that there is a battle between buyers and sellers, and the beautiful thing is that the battle is extremely tight. In my previous video on the textbook flag trade, I talk about those tight battles, but to summarize, this is something that you want to see when looking for a flag trade. Look at how much 448 keeps buying. At this point you are certain that this is not a normal buyer and you might be justified to be leaning long as the bids are above 448. If the bids drop below 448, the long thesis is immediately invalidated. Now that I have said all of this, let me list the variables of this specific trade. The daily chart is squeezing, the stock failed to sell off at the open and is now flagging back above the opening print. I have seen an objective support on the level 2 at 448, which gives me a tight stop level, and I have also seen the level I want to be long above, the 450 level. My first major mistake was I bought 450 instead of above 450, meaning 51 or 52. This is a mistake because I saw 450 holding, and usually half and whole dollars can act as support to resistance. This 1 cent difference of buying 451 instead of 450 will lead to a big increase in the expected value of the trade. Notice a couple of things about the upcoming breakout of 450. On a breakout you want to see the speed of the tape increase. Also, you want to see volume coming in as well as price moving away from the breakout point and bids stepping higher and holding higher. My second major mistake is that I take partial exits just as the stock starts breaking out. By doing that, I take away my chance for being involved in the stock if it becomes parabolic and continues the daily squeeze. I should always think about my reasons to exit and enter. In this case, I had a reason to enter, the 448 bid and the break above 450, but I did not have a reason to exit right away. The lesson here is I should be more patient in waiting for reasons to exit to present themselves. Hopefully you remember that it was Amex that was buying at 448. Notice that he is back to the bid at 466 and keeps buying much more than he shows. Since it is Amex again, I am justified to think that this is the same buyer and also that he can keep stepping the buy order higher. Since he has done it 2 times in a row, I take it as a short-term pattern and I am looking to see whether he will move the order even higher. The plan is to remain long with whatever size I have left until bids drop below the last area Amex was holding, which moves up from 448 to 466 now. Please note that the hold at 448 was a reason to be long because it was aligning with a consolidation on the 1 minute. Seeing this held bid at 466 is a nice thing to see if you are already long, because you can use it as a stop level, but buying in front of 466 doesn't make sense since it is not aligning with the chart and you should be extremely confident that the move higher is going to continue for it to make sense. Now that the 466 bid drops, you are justified to exit on the next bid. Keep in mind that this is a scalping approach, and if you have a bigger picture thesis, this wouldn't necessarily be a reason to exit. This was the scalp trade. I will proceed with a quick summary. First, let me repeat the variables. The stock is squeezing on the daily and already spent a day afresh at the top. It failed to sell off at the open and we are back above the opening print, and the 1 minute is forming a flag and the flag is confirmed on the level 2. Now I will cover my executions and mistakes together, because my mistakes were mainly in the way I executed the trade. My entry was at 450, which was a major mistake. It should be 451 or 452, because then we are above the $0.50 and the $0.50 was also holding the offer. This 1 cent difference will increase the expected value in the long run. My first and second partial exits were pretty bad. For any order I execute, I should know my reason to execute it, and for those two I really had no reasons. Something I did not mention for the third exit, but if you look back at the tape you will notice, is that 468 held the offer. That was the reason for executing my third exit, and even if it was not major, at least there was a reason. The fourth and last execution, where I got flat, was the only execution that had a significant reason to exit. It was the 466 buyer on Amex finally dropping the bid. Thanks for watching and I hope it was helpful.